Turning a small 100 investment into a significant $10,000 return in the world of cryptocurrency is not just a dream for some investors, it's a result of carefully planned strategies, risk management research, and a deep understanding of the market. While the volatility of cryptocurrencies makes them a high-risk investment, they also offer high-reward opportunities for those who know how to navigate them wisely. The key is not about luck or chance, but about discipline, strategic planning, and staying ahead of trends. To understand how this transformation is even possible, we must explore the fundamental building blocks that make up a successful crypto investing journey. The first step in any successful investment is education. Before putting a single dollar into the crypto market, you need to understand the landscape. What is blockchain technology? How do decentralized finance, DeFi, non-fungible tokens, NFTs, and smart contracts work? What are Bitcoin and Ethereum, and how do they differ from altcoins? Why do crypto prices move so rapidly? And what influences market sentiment? These are not just technical questions, they are the keys to unlocking your success. Once you have the knowledge, your decisions become calculated rather than emotional. Beginners who invest without understanding often fall for hype, scams, and FOMO, fear of missing out, leading to losses. After laying a solid foundation of knowledge, the next step is to determine your investment goals and risk tolerance. Knowing how much you can afford to lose is just as important as knowing how much you hope to gain. Turning $100 into $10,000 is ambitious, and while possible, it doesn't happen overnight. Some investors may achieve this through a few bold, successful trades, while others do it over time by compounding gains, reinvesting profits, and minimizing losses. One of the best ways to grow a small investment is to look beyond the popular cryptocurrencies and focus on up-and-coming altcoins with real potential. These altcoins are often undervalued and may present exponential growth if chosen wisely. Finding high-potential altcoins requires active research. This involves studying a project's white paper, checking the development team's credibility, examining the roadmap, and seeing how active the community is. Platforms like Twitter, Reddit, especially r cryptocurrency, and Discord groups can be invaluable for spotting gems before they go mainstream. Look for coins that are solving real problems, building scalable solutions, and are backed by serious development efforts. Also, keep an eye on partnerships, listings on new exchanges, and development milestones. All these factors often lead to price surges, especially in the early stages. Another highly effective strategy to build wealth in crypto is to leverage pre-sales and airdrops. Pre-sales allow early investors to buy tokens before they hit the market, often at a much lower price. Airdrops, on the other hand, are free token distributions usually offered by new projects to build awareness. Some investors have multiplied their investments several times over by getting into the right pre-sale or receiving valuable airdropped tokens. However, this also comes with high risk. Due diligence is necessary to avoid falling into scams or rug pulls, which are common in the early stages of new crypto projects. In addition to choosing the right coins, diversification plays a key role in protecting your capital and increasing the odds of success. Never place all your money into one coin, no matter how promising it seems. Spread your investment across different sectors of the crypto space. For example, you can allocate some funds to Layer 1 protocols like Solana or Avalanche, a portion to DeFi tokens like Aave or Compound, a part to gaming tokens or metaverse coins, and maybe even a small amount to stablecoins or yield-generating assets. This way, you reduce the impact of one bad investment while increasing your exposure to different growth opportunities. The importance of risk management and emotional control cannot be overstated. The crypto market is known for its extreme volatility. Prices can double or halve in a matter of days. Without a clear strategy, many investors panic and make irrational decisions. That's why techniques like dollar-cost averaging, DCA, are often recommended. With DCA, you invest a fixed amount of money at regular intervals regardless of the coin's price. This reduces the risk of buying at a peak and helps build your position gradually over time. More importantly, it allows you to stick to a consistent plan without being swayed by emotions. As your portfolio grows, you can start taking advantage of passive income opportunities. Staking and yield farming are two popular ways to earn rewards on your crypto assets. Staking involves locking your coins in a network that uses proof of stake to validate transactions. In return, you earn rewards, which can be reinvested. Yield farming, while more complex, involves lending or providing liquidity to decentralized exchanges in return for interest and additional tokens. These methods can accelerate your gains and help you reach your $10,000 goal faster. However, always do thorough research, as some platforms carry high risk and may collapse without warning. Some investors also venture into trading to increase their returns. Day trading or swing trading can be lucrative, but it's not for everyone. It requires a strong understanding of technical analysis, chart patterns, and market psychology. Successful traders use tools like RSI, Relative Strength Index, MACD, Moving Average Convergence Divergence, volume analysis, and candlestick patterns to time their entries and exits. Trading also demands strict discipline, stop-loss settings, and a clear profit-taking strategy. One wrong move, and you could wipe out a large portion of your capital. That's why many new investors prefer to hold HODL instead of trading aggressively. No matter what strategy you use, staying updated with market news is crucial. Government regulations, global economic trends, exchange hacks, partnerships, and even tweets from influential figures can move the market significantly. Use platforms like CoinMarketCap, CoinGecko, Crypto Panic, and being informed gives you a competitive edge and helps you make smarter, faster decisions. Joining communities, subscribing to newsletters, and watching educational content can also deepen your knowledge and keep your strategies sharp. An often overlooked aspect of crypto investing is the mindset. Many people expect overnight success and get frustrated when their investment doesn't skyrocket immediately. True growth requires patience and resilience. You may face losses, make bad calls, or watch your portfolio drop in value during bear markets. The key is not to panic. Treat each mistake as a learning opportunity. The investors who turn $100 into $10,000 are often the ones who did not give up, who stayed consistent, and who adapted their strategies with time. Success in crypto is just as much about personal growth as it is about market gains. Another important lesson is knowing when to take profits. Many investors ride their gains until they vanish, waiting for the next big move. Don't let greed take over. Have a plan for taking profits at different stages. For example, you can take 25% profits when your investment doubles, another 25% when it triples, and let the rest ride long-term. This ensures you have locked in some gains while still participating in future growth. Reinvesting profits into other promising opportunities also helps in compounding your wealth and reducing overall risk. Finally, security is paramount in the crypto space. With great returns come great risks. Use trusted wallets, enable two-factor authentication, and never share your private keys. Consider hardware wallets for long-term holdings. Many investors have lost all their gains due to hacks, phishing attacks, or exchange collapses. A part of your strategy should always involve protecting your assets and minimizing exposure to unnecessary risk. Stay skeptical of too-good-to-be-true projects. Avoid pump-and-dump schemes, and always double-check sources before acting on information. In conclusion, turning $100 into $10,000 through crypto is challenging but entirely possible. It requires education, patience, strategy, emotional discipline, and a strong focus on security. Whether through smart coin selection, early entry into pre-sales, earning through staking and yield farming, or even disciplined trading, the opportunities are endless for those willing to learn and act wisely. The beauty of the crypto space is that it's open to anyone. No gatekeepers, no minimum capital requirements, just pure opportunity. If you approach it with the right mindset and consistent effort, your small investment could turn into something life-changing.